Hi there. Very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session as promised on Thursday afternoon. And today I would like to talk to you about one of the most important point, considering the kind of markets that we are currently facing, and why it is imperative to probably keep your winning trades going rather than booking profits here and there. Uh, Plus, we'll answer your queries and talk a little bit about the markets as well. Afternoon, Harsha. So let more people join in, let more people get into it. One small request would be to kindly subscribe to my channel, whoever is watching this channel. Uh, the subscription rate has been abysmally low for the last 1 or 2 months. Uh, Probably the reason could be that YouTube is not sharing the video straight away. That could be a reason, the reach, etc. But I hope everybody is getting the notification. Kindly do write in the comment box whether you are getting the notification of the live session straight away when I start the session, or you're not getting it. So would like to know that as well. So as far as the markets are concerned, they are doing pretty well and decently, and we are seeing 17,000 being taken out. I still believe that we will see a decline. Uh, Maybe now, maybe at the end of the year or so, because the markets, if I take even 800 rupees EPS for FY23, even then the markets are reasonably priced at this point of time, but at 20,000 will become expensive, so there could be a chance of a 15% upside, but with a caveat that there could be a decline also in the market. So what one needs to do is be patient with their investments and ride through any declines that come through. I think we are in for a massive bull run on a you can say 5, 6, 8 year time frame. So anybody who has entered the market even this year can hope for making a lot of money by 2026. So if you have a good 4, 5 year time frame, you have bought very good quality, top quality stocks, you will end up making a lot of money. But on a short term basis, there will always be volatility, and there will always be chance that large caps will perform, mid cap will not perform, or in some weeks small caps will perform and large caps will not perform. So we are seeing large caps like Asian Paints, Pidilite, DMart, etc., just going like mid caps at the moment, and they're performing in that manner. Uh, so this is one phase, and another phase would come in where the mid caps would do a lot well. But at this point of time, it seems like that for the next 1 or 2 months, we'll see the mega caps do extremely well. And probably the reason has been the GDP numbers that have come in. And it seems like we could be headed only one way, and that is up with respect to growth compared to what we were doing last year. So we are doing fine. We are not doing badly in terms of our growth for the economy. Yes, there are people suffering. Yes, there are issues with the lower strata group of people, but listed companies, branded companies are earning a lot, and with higher inflation they are earning even more. Those larger brands can easily pass on their you can say cost and eke out even more from the customers, and that is unfortunately that is what is being happening. So that is why the inflation is rising, and these brands are making money, so these stock prices will keep on going up. That is my rationale in this regard. But on a shorter term basis, and by short term I mean in the next 1 year, 6, 8, 9 months, we will see a seminal decline in the market, and that would be only buying opportunity. Either you buy or you just stay put with your investments for this 4 to 5 year time frame. All right, so now I would like to, and this is related to what I've just discussed. So, why it is imperative for you to keep your trade going on as you have been doing. I mean, you have taken a trade, for example, for a 2 month period, and it's giving you 15, 20% in that 2 months, and now you are looking to probably take it out. Why I believe that in this kind of a market environment, it is imperative to make the best out of the trades. In fact, in any kind of environment, is because over a 1 year period, when you look at your trades, and this is from my experience over the years, over the last decade, that when you look at trades and whatever trades you take, over a 1 year period, you will get very few opportunities to make a lot of money. You will get slightly more opportunities to make 10-15%. You'll get even lesser opportunity, and then you'll make a lot of losses as well as a trader. So what you need to do is, suppose you have bought something and you have put in your chunk of your, you can say, trading money into it, and it is doing extremely well. Rather than taking money and fearing that the stock will go down, if you cannot double up into the investment, or the trade, probably what you can do is just trail your stop loss in such a manner that you avoid selling it, and just go through some sort of an investment mindset, and keep on holding the stock for 2 weeks, and then 2 weeks more, and then stretch it with 1 month more, and then a month more. Another result will come out, the results are good, just keep it for a month more, and you will see declines of 8 to 10%. There's no doubting that. But overall, when you look at the stock that you should have held for 2 months, and you hold for 6 months, the returns could be appreciably higher. A case in point is DMart, and we are seeing that from 2900, 2700, about 6-8 months back, it is now 4000 and beyond, and probably it has declined today. I have not looked at the price today. But these top notch companies, when they start moving, they move big because large players get into them on decline. So decline did take place when the stock fell from 33, 3400 all the way to 2800. And then the big move started and it began, and the buying has been appreciable, I think, from February, March until now. So over the last 6 months, it has moved up something like 40% or so. And that is the kind of move that we are seeing in many of the mid cap IT companies. That is the kind of move we are seeing in many of the larger cap consumer names. You look at Asian Paints, from around 2400, the bottom 2400, 2450. It made during the time when Grasim came out with the point that they are getting into paints. You look at the stock price today and it's up like 35-40% from those levels. And I'm talking of large cap companies. So if you have taken a trade, for example, in an Asian Paints at 2420, 2450, you are you made around 10-15% in it, and you feel that a larger stock going up 15% in a month, let's take the money out. I would like to ask those people that whether you would have been better off just holding on to that stock even now. That is what I'm trying to explain, that it is imperative that once any stock, be it small cap, large cap, mid cap, as a trade is doing well, there has to be some reasons for the stock to do well. And when it is started to do well, and you look at the reasons, you look at numbers, etc., you'll feel like, okay, I can sell, make money here, 15-20%. But if I probably hold on to it for a couple of months, can it go up 30%, 40%? Because what will you do with that money? Suppose you sell it after a 20% upside, you pay 15% on there, so 3% as tax, so you make 17%. And then you buy something else. Instead of buying something else at an elevated level because the whole market goes up, it's better to just keep that trade going and just wait for it to probably trade to end. Yes, you will end up, say, if the stock has gone up 40%, you'll end up losing 5% on it. A stock falls 4-5% in a day, you just exit. So you make it still 35% and not 17% in the end. So that is what I am trying to explain, that when you have a stock that is performing on a short term basis and your targets are met, keep your stop losses higher, trail your stop losses, and keep the stock for as long as you can, so that you're able to eke out the best out of that trade, because you never know when the tide turns to you, and the market keeps going up and you don't make money in trade. So it is a very difficult game to make money on a short term basis while trading. So once you have something which is making you a lot of money, or which is making you money in a very short term, so you would have thought that let's make 20% in Asian Paints in 6 months, and it's up 20% in 2 months. What you do is just wait it out, just see how it performs in the next couple of months and whether you can make 40%. So just an example, not saying that you buy Asian Paints you'll make 40% in 4 months. So that is what I'm trying to explain. I hope you got the point, that it's better to probably keep the same trade going rather than taking a new trade and booking profits. So be lazy in booking profits and be quick in booking losses in trades. So if your trade is not working and your stop loss is met, just exit the stock even if it is the best of the stock. That is the other side of the coin. All right, so I'm ready to answer your queries. Kindly use this super chat and super sticker feature that will help me grow the channel. That help you also ask me questions and eke out answers in greater detail. All right. So the questions that are coming up at the moment, Larsen and Toubro Infotech, at 5300 probably you can buy a few and probably buy more at around 47, 4800. That will be my call. So you can buy some here and buy some on decline. I think it is headed to 6000. So what you can do is buy some here, let it go to 6000, wait for a decline, buy more and hold 2 years. BPCL is looking okay at the moment. I think better levels to buy would be 360, 370, 350, 360, 370 if that comes in. If you have bought, hold on to the stock. Okay. I think if you're making money in Dr. Reddy's, is something you have bought at 4,000, 4,300 book profits. If you are making less money, hold on to the stock, probably book profits around 6,000. 6,000 could be a strong resistance for Dr. Reddy's. Yeah. Man infra, I would say avoid most of the infrastructure capital good companies. I would say avoid even at these levels, and whatever the talking point that is going on, I would still say avoid those companies. Tata Elxsi looking good. I won't say it's a fresh buy at these levels, but I think it is looking good for 6,000 over a 1 year period. Declines to 44, 4,500 could be good levels to get into Tata Elxsi. Okay. Raddington, not the best of fundamentals, so I would say avoid the stock per se. Polycap hold with a stop loss of 1950, 1950. I think this is headed to 3000 and even beyond in the longer run. Keep on holding Polycap. What levels to add? Probably 2000 would be good levels to add, 2100, 2000 around those levels. All right. If you have bought at 300, buy more here. I think 230 reasonable levels to buy. If somebody has bought at very elevated level, there's a chance it could go to 200. You can buy more at those levels, and probably average it. I think 230 would be good levels to buy more. Your target could be met in a year, year and a half, year time. I think 1 year time you'll get 300 on the stock. All right. Shardul, thanks for your contribution. If you have any queries, you can shoot that to me. Yeah. Lakshmi Organics, yes, over a longer term can do particularly well. So yes, Lakshmi Organics, you can definitely add. I need to check, Likita. I don't know about the company that much. At Dixon, I believe is a 6,000 rupees stock over a 1 year period. Declines towards 4,100, 4,000 is a buying opportunity. Any level around 4,000 is a good buying opportunity on Dixon. Clean science and technology is expensive at 1,500. It has come down, but see, it is trading at very elevated levels. I won't say it's a buy at this point of time, unless you're trading. Probably keep a stop loss at 1,200 and hold on to the stock, and you can buy. I think most of the chemical stocks have run up, so it's better to probably avoid those at the moment. Nazara is a very good 5 to 7 year play. If you can buy and hold that period, and if you are a risk taker, can take a risk of 30% on the stock, you can buy Nazara at these levels as well. Prince Pipes is fine from a 2 to 3 year time frame. On a shorter term basis, there could be decline possible in the stock. A Kelpest, if you bought at 585, add more at 480, 470 if it comes there. You will, if you can wait 2 years, 1 to 2 years, I see the stock headed towards 1,000. And if you can wait 3 to 4 years, I see the stock headed beyond 2,000 on the stock, probably in 4 years' time. Asian Paints entry level, I'm sorry. Asian Paints entry level, very difficult to say. What you can do is, this is one stock where you can do an SIP and keep buying few shares. If you have, say, 10,000 rupees per month to spend, 3 shares per month could do. All right. FL looks good. So FL beyond 4,300 looks good. I was waiting for it to cross 4,300. It has done that. Looks strong now on charts and can be bought. Long term, the story was intact even at 3,800 on FL. I think Voltas looks promising from a 3 year perspective, but Whirlpool has valuations on its side. Voltas is slightly expensive, but the business of Voltas is much stronger than a Whirlpool. So very difficult call, but I would pick Voltas in these two companies. All right. I need to look at standard surfactant. I have not looked at it, so cannot comment on the stock per se. Sequence Scientific, if you have bought at 220, as I said, hold 1 year target is 300 on the stock. If you have 2 3 months time frame, then it's a sell. See, on Sequent, I can say a disclaimer, I do hold the stock. I think next quarter results might not be that great, and that's why the stock is not going up. After the next quarter results, so that could be by November, we'll see a move in Sequent, and the move could be very sharp, very quick. So by November, in the next 2.5 months, you may not see much movement on Sequent. Reliance, after 5 years, you can put a CAGR of 18-20%. It can give that to you. BSC with the same vigor can grow. So that's my call, around 20% CAGR possible on Reliance. Sumitomo Chemicals, no comments. Actually, on most of the chemical companies, I won't like to comment much because of the kind of stretched valuations they have. A very good company, JK Lakshmi Cement. Post October, I think a move is possible on the stock even further. Amtar Tech, in my opinion, is a buy at these levels and on declines from a long term point of view. And if the results are good, even short term, it can perform. But from a 3 year time frame, Amtar Tech is reasonably priced even now. Tatva Chintan Pharma, I would say most of the pharma companies avoid mid caps. Larger, you can buy large cap companies would be better off to probably buy into. Yeah. Okay, guys, thank you. Thanks for being online. On a Sunday, I would have a longer session with you, and we'll discuss about stocks as well, and another topic. Thank you. Kindly do subscribe to my channel, hit the bell icon so you can get my videos straight away when I post it. Thanks a lot.